Hi, it's Mark Freedman. Hoping you're all doing well and staying warm and safe today as we're planning for an impending, pretty major snowstorm here in Massachusetts. Unfortunately, today's snowstorm coincides with an event that we were hoping to run at Teresa's today to bring you into the fold of what we saw was going on in the market. In fact, we had invited Eric Fischel from BlackRock Investments to be part of that event, but unfortunately, we've needed to cancel everything today. We need everyone to be safe. But we did want to be sure that you got a sense as to what Marion and I are doing here in the office. Because, you know, the market today is going to be a little volatile. It's been very volatile through the course of this first year, through the course of 2016. And we want to give you some thoughts as to what we see as planned for the months to come. So the snow's falling. It's coming down now.
Finally.
Yeah, I know. We were threatened a little bit this morning when we drove in here, thinking that there was no snow on the pavement and should we run this event, but clearly the snow is coming down now and we really need to cancel everything. So I just wanted to bring Marion into the picture here.
We would have loved to have seen everyone in person today. However, we know you don't want to drive in the snow, nor do we. Don't want to take our lives in our hands. So.
That's right. And with the market opening up today, it looks like it's going to be opening up down another 200 points. It gets a little shaky here.
It certainly does.
Certainly.
So don't watch it. That's our best advice.
It really is. You're going to be getting your January statements in the next day or two if you haven't got them already for the weekend. Look, the month of January was horrible. It was one of the toughest months that we've ever had.
It really was. But one thing that many people don't remember is back in August, we saw these same levels of decline, only it was mid-month. It wasn't at the end of the month. And it wasn't beginning off of the beginning of a year. So I think that's the difference. This has gotten a lot of press at the beginning of this year.
Yeah, and people have all sorts of reasons as to why they think the market fell,
right,
or the market continues to fall.
Right.
I mean, what are some of those?
China it's been blamed on China, it's been blamed on the falling price of oil. There's a lot of uncertainty in the worldwide economic scenarios right now. And there's always some sort of uncertainty somewhere. However, these have become more prominent and they're just, everyone's taking notice of it right now. And the stock market is reacting.
Yeah, I mean, how much do you think the election is having to play into this thing?
Oh, I'm sure the election is having a lot to play into it as well, because that provides a great deal of uncertainty as to who will be the next president. There are so many candidates out there. The ones who are on top right now, or close to the top right now, are certainly not the ones we would have expected 6 months ago. And who knows what will be in 6 months. So that any kind of uncertainty, the stock market doesn't like.
And I think we'll all agree that the market moves on, you're right, on uncertainty, that's for sure. But
Absolutely.
with this data age that we live in today, this internet media world that we live, someone tweets something, someone says an obscure statement over the internet, and boom, that changes the course of events with everything.
It certainly does, and you know, realistically, a lot of this will get worked out. I read a story yesterday that said oil was going down to $20 and then going back up to $56 in the next 6 months. Nobody knows what's going to happen to oil, but one thing we do see very frequently among the prices of currencies, stocks, everything, is that they overshoot. And that's a term meaning that they go down too far on the downside and they probably go up too far on the upside. We've seen that up too far on the upside with some of the technology stocks, and that's what we're seeing on Friday. That's what we saw Friday and are seeing today in the market, that those stocks are being hit very hard.
Yeah, those popular stocks that were referred to as the FANG stocks.
Yeah.
Facebook, Amazon, Netflix, and Google. That did so well in 2014. And frankly, if those were the only 4 stocks that you owned last year, you did really well. If you own any of the others, not so well.
Right.
This year, they're starting off as horrendous.
That's exactly right. And so we've seen some really big declines in some of these stocks at the beginning of this year. And we'll have to see. I mean, who knows what will happen? Nobody knows. So any of these predictions are just that, predictions. They are not fact. But for long-term investors, you should stay with a good, well-diversified, well-balanced portfolio.
And we work that into your overall financial plan too. I mean, that portfolio is just one piece in your overall objective. You're going to need income in retirement, whether it comes from Social Security, a pension, checks that we issue from your investment account. Maybe you're working, or maybe you're even still trying to accumulate wealth. All of that builds into the overall financial plan, and we take great pride in trying to make sure that we know where everything is and what it's all worth before we ever make any investment decisions for you.
That's correct. And one thing I do want to point out as well, there's been a lot of talk about bonds and get out of the bonds. Bonds are terrible. Don't have any exposure to bonds. Well, guess what? High quality bonds have actually done quite well over the month of January. So we've seen nice gains in those. If you didn't own any bonds, then you would have seen no gains in January. Now, that's not the same thing for lower quality bonds. Those did experience a decline in January. However, high quality bonds did very well, and those are the ones that everyone said, "Oh, get out, get out, get out."
Well, I want to thank Eric Fischel for providing us with this booklet that's called "Is Your Portfolio Ready for 2016?" We would have had this available for you today at the seminar. We will make this available to you online. It'll be available in our upcoming newsletter as well. If you'd like to get a hard copy of it and you're in the office, you're welcome to swing by and grab one, but you'll be able to download this thing pretty easily. A couple other things before we head out. Like we said, January statements will be arriving in your mailbox in the next couple days. A lot of people have been asking about 1099s.
Right. We've had a lot of calls on that, and just so you know, the 1099s for retirement accounts have been mailed out. They went out on January 31st, and they're also available online. The 1099s for non-retirement accounts will not be available online until February 15th. They will not be mailed until February 15th. So you should expect those anytime at the end of February.
Right, and if you need information on realized gain and loss information, all of that will be on the 1099. The fees that you paid us will also be on that 1099. And one final thing before we do go, this is scholarship season again for us, and we will be holding our scholarship again for a graduating high school senior. If you know of somebody, if you have a child, grandchild, great-grandchild, doesn't matter, whomever it might be, they're welcome to enter into our $1,000 scholarship. They have to answer the essay question, what does financial responsibility mean to you? We'll be picking a winner. Well, Marion and I won't be. We have a collection of our clients that do that selection process for us.
Impartial.
They're very impartial. That's going to do it for us. Hope you stay safe today. Be careful with your back. Make sure you shovel properly or hire that plow. We'd always encourage you to have someone else do the hard work for you.
Stay warm.
That's right. Have a great day. Bye-bye.
Bye.